Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Good day, Sandra. Thanks for confirming. Audibility is fine. Asian session live market analysis on March 26th. Between 5 and 5:30 GMT, we will be reviewing the market using the live market code page. I will give the link for the same. I have given it in the hotcom window. I'll now focus the camera over that of the live market code page. I think we are able to see the live market code page. Currently, Euro is trading around 1.3253, 1.3255, 1.3284 is the high, 1.3248 is the low, 17 pips negative net change is seen. And in the case of yen, 82.70, 82.71 are the current levels, 82.77 is the high, 82.38 is the low, 36 pips positive net change is seen. And in the case of GBP, 58.58, 55, 58.58 are the current levels, 58.83 is the high, 58.54 is the low, 13 pips negative net change is seen. So the three majors are showing the USD gaining move. Also USD CHF is showing the positive net change as the USD gaining move. It is currently trading around 90.91, 90.94, 90.98 is the high, 90.70 is the low. When you watch carefully that their nominal dip has happened for the week beginning during that of the Japanese session. And also in the case of commodity pairs, we come across the Canadian dollar and Australian dollar are showing the USD gaining move. Canadian dollar is currently trading around 99.82, 99.85, 99.87 is the high, 99.66 is the low, 6 pips positive net change is seen. Australian dollar is showing about 16 pips negative net change, similar to that of Euro. And trading around 1.0450, 1.0452, 1.0492 is the high, 1.0446 is the low. So in all the currencies, the majors and the commodity pairs, you come across subdued moves are happening and less than 20 pips net changes are seen, excepting USD yen, which is showing about 37 pips positive net change. So on Friday last week, you would have noticed that they have been doing predominantly the contrarian moves, gaining the levels in the case of USD yen and also USD CHF and USD CAD. They took it USD CAD to parity and then made a nominal dip. So they have been focusing on that of the denominator currencies. At the same time, they slowly gained the levels in the case of the numerator currencies as well. So predominantly last week they have been handling the crosses. So especially the yen crosses. On Thursday they made that dip and then subsequently on Friday they gained the levels in the case of Euro yen and GBP yen. So in both you come across now positive net change because USD yen is showing more positive net change when compared to that of the negative net change in the case of Euro and GBP. So they are expected to slowly gain the levels in the case of the yen crosses to start with. Then also you come across in the case of European crosses, Euro GBP is showing 3 pips negative net change and Euro CHF is showing about 2 pips positive net change and GBP CHF is showing positive net change. So they intend to slide Euro GBP nominally, and because you find the 16 pips negative net change in the case of Euro and 12 pips negative net change in the case of GBP. So it is lesser than that of Euro. Obviously, you'll find Euro GBP is making the nominal dip and they intend to gain more levels in the case of GBP to start with and followed by that Euro could gain the levels during the day. So week beginning false move could be restricted to that of the Japanese session and you find that they are busy handling the crosses in a thin volume condition and then subsequently they are expected to focus on the majors. So let us see how exactly they are going to handle the market. I will now focus the camera over that of the PowerPoint presentation. So irrespective of the market condition, we just make a reading of the market using the live market code page. then decide upon the trading. So ultimately, we read the market in order to identify the right type of trades. So in that, we initially make a note around 3:30 GMT, the initial lows and the highs in the four majors and two commodity pairs. Then subsequently, we identify whether the market is closer to that of the low or closer to that of the high or breached the initial low or the high, and try to find out what could be the possible type of moves and they could make, and also the sequence, whether they are going to make the moves in sequence of a specific pattern. So that we will be able to identify and track the market using the time frame. So if you use the chart, we don't have the facility to find out what could be the time frame we have to use it. Whereas here, we follow the market using the GMT time and also follow the timings followed by that of the players. So as a result, we'll be able to find when they are going to handle the majors, when they are going to handle the crosses. We are able to identify and then try to take the positions in the majors or the crosses during the respective time frame, during which the players focus on those currencies. So even though we identify so much with regard to that of the market timing and also the type of move they could do it and things like that, our reading can go wrong because we are human. So when we find that the reading goes against us, we should not become upset, or we should not simply just blame the market or blame any analysis and things like that and look for some other analysis, etc. Because the players have got the specific information from that of the interbank treasury that whether the traders are long or short in specific pairs. So based on that, they try to make decisive moves in order to make money, because they pump in huge resources and the money into that of the market. And if they incur loss at times, then it will be phenomenal loss for them because of the overexposure in the market. So they don't take unnecessary risk in the market. At the same time, we should also see that we don't take unnecessary risk or undue risk in the market. So how to limit the risk? We can limit the risk by using an entry stop order or the hedging order, so that the position will be held, but still the market might go away from us. Still, we will be able to identify what sort of trading strategy we can use to come out of the hedging, as well as book profit in the original position, or close the original position and book profit in the hedging, and that sort of decisions we will be able to take it. So at a given time, we will only take the risk for about 30 pips in a currency pair. So we will try to take only 1% of your equity, the position. To take the position, we use only 1% of our equity, and to limit the risk, we use 30 pips hedging order. In case the hedging facility is not available, we can use the stop, and the stop has to be tight. And you might have that impression that why not I use about 100 pip stop or 150 pip stop and things like that, so that the chances of stop not being hit is great. But in the event if they hit the stop, the loss will be phenomenal. So don't take such chances, because if predominant of the traders keep quite away the stops, then the players have got the knack of using some data release as a trigger and simply make an unexpected move in the market and hit the stops, which are quite apart from that of the market. So when they are capable of handling such stops, it is not wise to use the wide stops. Instead, you tighten the stops, and once the position makes profit, you just keep the stop at entry so that you eliminate the risk in the market. Then subsequently, you trail the stop in a profit-making position. My strategy is use the trailing stop in profit-making position and use the hedging order or a trailing hedging order in the loss-making position. That way, you will be able to really handle the positions effectively and try to take appropriate decisions whether to hold the original position or to book profit with regard to the hedging, etc. And these sort of decisions will really help us, because market has got the capabilities of going upward or downward. Either euro can go up or come down in a brief time or in one session, and the subsequent session it can go up. So alternatively, they only handle Euro and GBP depending upon the European news and the US news. If the European news is negative, they may drop Euro, and when US data is negative, they can simply rise Euro. At that time, nobody questions, because during the European session, when European economic data was weak, so Euro was dropped. Then how come Euro could gain when US data is also equally weak? When both the data are equally weak, where is the question of rising Euro? So these sort of questions nobody asks in the market, and immediately they say that it is pertaining to US dollar, so obviously Euro is going up. So Euro gains the strength based on the weakness of US economic conditions. No, it is a very, very negative situation. It is something like, and somebody is sick and a certain other person is very, very sick, and still you say that he is well off. The first person who is sick is well off and he is comfortable. Can it be comfortable? No. But in the market, they can give such attributes. So always keep in mind that the players have got decisive information. Based on that, they make the moves in the market. Whatever be the type of forecast and analysis we do, and they can simply go against any sort of analysis. They can go against it, because ultimately they identify the herd of traders where they are taking the positions and act against them. So when you all follow the charts and follow the technical analysis or follow the Fibonacci retracement and try to take the position, they breach such supports and go below and hit the stops and go above. And so we become helpless in such situations. Ultimately, only the trading strategy is going to help us to consistently make money from the market. And in order to fine-tune our trading strategy, the best way to enter into the market is when the market is closer to that of low and not breach the low for more than 30 minutes. From the start of the session, we can try to take a buy position near the low. And if they go above, if they are near that of the high and not breach the high for more than 30 minutes from the start of the session, we can try to take a sell position, because we identify their intention, because they avoid making an upward stop, and that indicates that they do not want the profit booking opportunity to that of the long holders. When they gain the levels, quickly the people could keep stop at entry and book profit. So they avoid that and then start making the slide. And times you come across when the short sellers are relatively high and the long holders are predominantly more, and still some short sellers are there, then what they do is they make a brief quick upward stop and come down, so that the tight stops of the short sellers are being triggered, and then subsequently when they drop, then the long holders are forced to liquidate the long positions. Alternatively, they do this and see that whether you go take a buy position or a sell position, the trading is not going to be easy. And they got the capabilities of hitting the stops. So it is not necessary that we have to alternatively become bullish and bearish or develop a bias towards the market. And keep in mind that the players create the market sentiment and act against the traders. So what we try to do is, whenever they make quick moves in the market, a quick drop, if they make, we try to buy. When they make a quick rise, we try to sell. How? Not indiscriminately. We try to see that they gain the levels for about 1.5 hours. After that, the last 30 minutes, if they stop cutting the new high, then we try to take a sell so that they continue to make the drop. Similarly, after about 1.5 hours, we just watch the last 30 minutes. If they don't breach the new low in that 30 minutes of observation, then we try to take a buy. In the event, if they continue to breach upward and go above, after 2 hours, we identify that they are trying to do the intentional move on the upside. So we don't do any sell and buy trade at that time. We try to buy on dips and try to book quickly profit when they make an intentional move on the upside. On Friday, they had done the intentional move on the upside. Then afterwards, they are supposed to do the extended move. They alternate the intentional move with that of the extended move. In between the sessions, they make the false move and the stop ends. These are all the 4 types of moves they try to do it. So if they slowly gain the levels, it is an intentional move, and they are capable of gaining it for about 2 sessions and the start of the third session. That is what on Friday they have done it, and they gained the levels in the case of Euro and GBP during the early part of the US session, and then subsequently stopped gaining further levels, and they have been just booking profit, and they opened slightly lower, keeping at a lower level with a small negative net change, and they are closer to that of the low, and they are not breaching it drastically. That indicates that they are doing the extended move on the downside in order to make a downward stop and or a false move, then continue to make the intention move today. So they have the specific type of moves for the weeks. That is, week beginning false move, and then opposite move on the Tuesday, then Wednesday either way stop ends, the midweek either way stop ends, and Thursday and Friday they make the intentional move. If you follow those type of rhythms they are trying to follow, it is very easy for you to enter into the market and exit out of that. And don't become simply bullish or bearish in any currency pair, because that is not going to help us. The only thing which can help us to make money is wait for the quick moves, and when they quickly drop and stop cutting the new low, then try to take a buy. They will reverse it, and always follow the session timings. Now you find in Europe the daylight saving system is switched on, so you'll come across the time shift. I'll explain to you it. With regard to the initial lows and the highs today, what they have set, 1.3262 was the initial low. In the case of Euro, 1.3284 was the high. They breached the low and staying below that low and formed a new low, 1.3248. Currently trading around 1.3257 level. So it is an extended move on the downside, but it is a very, very brief downward move. And in the case of GBP, 1.5861 is the initial low, and they just breached it and formed a new low, 1.5854. You can see it in the live market quote page. The high was 1.5883. That is not being breached. So they have just made the brief drop below that of the initial low. When the new low is not being breached during the late Japanese session, you can try to take a buy. Then, in the case of yen, 82.38 is the low, and they are not breached it, and 82.77 is the high. They are not breached it, and they are holding around 82.70 now. So it is showing 36 pips positive net change when other currencies are showing less than 20 pips or 15 pips positive negative net change or positive net change. So USD yen is the first currency they wanted to gain the level. So you can try to take a buy when they just make a dip below that of 80 to 70 to 80 to 68, 65, etc. and try to keep the stop below that of 80 to 38 or just 30 pips below. And once the position makes profit, you try to keep stop at entry. They are expected to gain more levels in the case of USD during the day. And followed by that, they are expected to gain levels in the case of Euro and GBP as well, because week beginning false move, they are supposed to restrict that of the Japanese session as per that of the forecast model. Then in the case of CHF, 9070 is the low, and they are not breached it, and 1988 was the high, and they breached the high and formed 1998 and holding above that. And in the case of CHF, 11 pips positive net change is seen when Euro is showing about 14 pips negative net change. So that indicates that slowly they wanted to gain the levels. That means it is an intentional move on the upside, so they wanted to buy every sell order. When the long holders liquidate, losing the patience, they wanted to buy USD CHF. That means they are buying US dollar against CHF. Then in the case of commodity pairs, Canadian dollar 99.66 is the low, and there has not been breached. 99.84 is the high. They breached the high and formed 99.87, 3 pips above, and it is showing USD gaining move. Similarly, in the case of Australian dollar, 1.0447 is the low. They breached the low only by 1 pip, and the high is 1.0492. and that is not being breached. So you find that in the case of Euro, GBP and Australian dollar, they breached the low as the USD gaining move as an extended move on the downside, but it's a very, very nominal extended move. And in the case of denominator currencies, USD Yen, they are not breached the high or the low, and CHF, they breached the high, and Canadian dollar, they breached the high. So in all, they are showing the USD gaining move briefly, and slowly they are expected to change it to that of the contrarian move, gaining levels in the case of the denominator currencies as well, or reduce the negative net change in the case of the denominator currency. Then the denominator, after gaining the levels in the case of USD Yen, they are expected to gain the levels in the case of the denominator currencies, and then finally the numerators. These are all these type of moves anticipated based on the initial setup. They have done it. Let us see how exactly the forecast is. So the forecast is derived from that of the algorithm, and see, it is only used as a guiding factor, and we need not follow it fully because it is time-based forecast. So unlike that of the other type of analysis, here you come across the time. So we follow the times followed by that of the players. So now from today onwards, yesterday onwards, the daylight saving system switched on in the case of Europe and UK. So you find that 0030 to 7 GMT is the Japanese session. So Japanese session gets 30 minutes, it is short of 30 minutes from that of the earlier situation. Then European session starts from 7:30 GMT. So in between 7 and 7:30 is the gap time before the start of the European session. Already from that of the first week we have noticed that, second week we have noticed that US session starts from 13:30 GMT. So as usual, European session will get over by 13 GMT. 7:30 to 13 GMT is the European session. Then 13 to 13:30 GMT is the gap time. Then 13:30 to 20:30 GMT is the US time. This is the timing we are supposed to follow till that of October, when the daylight saving system is switched on. So during the Japanese session, dip and firm up moves are expected in the case of Euro and GBP. Then a quick rise is expected during that of the European session, and slowly they might go in for a profit booking. Initial buy, they quickly gain the levels and book profit and try to come at the lower level and start buying again. So this sort of churning, they try to do it in order to give support to that of the market. And when they buy, when the long holders, those who buy after the rise as a breakout trade, they are expected to come and liquidate the long position. Then subsequently, the players continue to gain the levels during the US session. So always keep in mind that the players, when they say the market is bullish, it doesn't mean that continuously they will rise the market. If the market is bearish, it doesn't mean that the market they are expected to continuously drop. Always they will try to make the swings. So in a bearish market, even a buy and sell trader will make money. In a bullish market, even a sell and buy trader may also make money. So be objective with regard to the market sentiments and try to see that you only read the currency in which you are interested and also the other related currencies, namely the four majors and two commodity pairs, and try to find out where they are focusing on. When they are focusing on in your currency in which you are interested, then try to take the position. Don't try to take the position just like that as soon as you open the trading platform and wait for it to make profit. And in that process, when they are not showing profit, you may lose patience. So patience is a virtue in forex market and also in other markets. And as far as I am concerned, market rewards patience. Then big beginning false move may be limited to that of the Japanese session, and afterwards they are expected to gain more levels. And the last week of the month, so from 26th to the 30th is the last week of the month. You know, whenever the month gets over in a particular week and the new month is in the next week, then for about 10 trading days, they are expected to make very aggressive moves in the market in order to hit the stops of the derivative markets like the options and the futures, and also induce the traders to take the opposite positions during that of the next month series. So if somebody is holding the long positions or the call options, they will try to hit their stops or just induce them to liquidate by eliminating the margin, and then subsequently they are expected to gain very quickly and again drop. When the traders think that the market is going to reverse and try to take a higher level call, then they again drop and hit their stops and then subsequently go up in the market very aggressively. So for 15 days, avoid doing any position trade. This week and the next week, avoid doing any position trade. Focus on swing trades and try to focus on the intraday trades mostly. And you can hold the position for a day or two, and if it is not going good, you should have that mindset to cut the position and take the reverse and quickly book profit and then reverse it again. That sort of mindset you need to have. Otherwise, you can use the hedging so that if they quickly drop and keep stop at entry, allow them to drop any level, and then subsequently book profit in the hedging and keep another hedging order lower, 30-40 pips below, and try to trail this hedging order upward until you are able to keep stop at entry in your original buy position. Then try to book profit in the original buy position as well. So with a single position and using the hedging, you will be able to book either way the profit, and try to focus on that sort of trade so that you will not be stressful at all and the margin will not erode, and avoid averaging it in lesser frequency of 30-40 pips. In case if you want to average it when the market goes against you for more than 150 pips, so that when 2-3 averaging, you will be able to come out successfully, and the averaging level will also come down drastically. If you try to take the average every 10-15 pips, then when the market drops 100 pips, your average will not help you at all. Whereas if you average it 150 pips, and if they drop over 350 to 450 pips, and then reverse also, in just one go, you'll be able to close all the position above their average. So that these are all the strategies, the trading strategies you can follow in order to avoid blowing up the accounts. So the contrarian moves are expected to remain in the market. And now at the moment, they are doing the USD gaining move. Slowly, they are expected to make the contrarian move and the USD weakening move during the day. So let me just focus the camera over that of the live market put page for us to have some sort of observations on the market while I'm replying to the questions which are asked here. Okay, Aviator has got a question. What are the expected moves for Euro and GBP? Today, after the Japanese session, they are expected to quickly gain the levels in the case of Euro and GBP during European and US session. Then see this. What can be expected Australian dollar and gold? Australian dollar, if you see that it is showing more negative net change when compared to that of Euro and GBP. So the gaining could be lesser in the case of Australian dollar to start with. Then later on, it is expected to gain. Australian dollar is expected to range in the level of 1.04 to 1.07 level, and 50 pips on the upside and 50 pips downside are the potencies of stop. Then the gold is expected to dip for the month end in order to induce the option expiry to close it with a loss, and then subsequently they are expected to aggressively gain the levels next month. And so you could come across it, gold comes to 1620 or 1610, or it may breach 1600 and then go up. And during such month end time, when they drop, you try to buy, you'll be able to see substantial profit in gold. Then Srinivasan, what is expected move for Euro for this week? And this week, after the week beginning false move, they are expected to gain the levels. They are holding all the gains, what they had done it on Friday. And with a nominal dip, and they are expected to slowly gain the levels from that of the European session. And we could come across 1.35 or 36 level in this week. And since it is the last week of the month, more aggressive moves could happen, I suppose. When the volume is good, then they go in for such aggressive moves. And they also do it mainly to handle the futures and the options market. Yeah, extended move will be limited to that of Japanese session. And Sabir, for euro, what level, price or time will indicate that the forecast for today is not in line? Okay, so as I explained that the week beginning false move, a dip is expected to happen only during Japanese session. And if they continue to dip from that of the late Japanese session, then understand that the forecast is invalidated and they wanted to do the intentional move on the downside. And then probably they could gain the levels afterwards, because when the short sellers cover their shorts and turn long, then obviously the players cannot give profit on the upside for the long holders. They will try to make that downward move to hit the stops of such long holders. Then the long holders technically turn short, then they go up. So it is nothing but the trap moves, and for that they use the economy as an excuse. In chat, is there a reason for the different timings of sessions used in your strategy as compared to that of the actual market hours? No, I do not want to make any comment with regard to that. I just given the timings followed by that of the players. You just follow those times and see whether the market is moving as per that of the timings what I have given. If you find it is reliable, you can use it. That's all. See, the traders are to be misguided various ways. Only then they will be able to lose money, or they become emotional and fail to use their common sense. Then it is easy for them to lose money. So what they do, the traders sell after a big drop or buy after a big rise. So if they want to trigger the traders to do such nonsense, what they have to do is they have to misguide the traders as much as possible. I do not want to comment beyond that. In Irish, what kind of moves do you expect for first week of April? They are expected to aggressively gain again during first week in the case of Euro and GBP. And as we have seen in this particular month, they have made, in the month of March, they have made more of a sideways move. They may not be dropping much after first week of April. And they may make again sideways move and continue to gain the level in the month of April and May. And the way in which they are slowly making upward move, you know that quick moves are possible. When they are slowly gaining the moves, that means for the long term, they want to really dig the level. In the case of Euro and GBP. And it may appear that USD is expected to gain all this way through, but the players hold their currency in USD and use the US dollar to buy Euro and GBP to gain the levels and come back to that of US dollar. Because in trading, if you simply sit on US dollar and say that US dollar appreciated and things like that, it is of no use. If you spend the US dollar, whether it is 1.32 or 1.25 against euro, and spend US dollar in US, you don't find any impact. Only when you convert it into other currency and spend it in other country, you will find the variations with regard to the fluctuations. So always keep in mind that the players use their prime currency or keep their prime currency only in US dollar. So they don't make US dollar permanently weak or permanently strong. And they have to manipulate the market in such a way so that they earn money out of such moves. And Shan. Is euro likely to test around 1.36? Yeah, there is a great chance for reach 1.35 to 36 in this week. And Jason, can you please display the initial? Yeah, expected levels for euro and GBP. Yeah, the potency is 130 pips gain. Sorry, 350 pips gain in a week in the case of euro and 600 pips in the case of GBP. So they could go as much as possible. Then JAG, USD INR. USD INR is expected to it is crossed 51 and again it is expected to drop and next month it will come across, it is coming to about 47, 46 area. And it is a month in time, so obviously they will make initially an upward stop and every market is manipulated, keep it in mind. And so they just make an upward stop and before making a drop, and during the last year handle the options and futures expiry. For that they gain the levels. So if you are trading in futures market, you need to understand what they are trying to do it and accordingly try to do the trades. Then Shans. USD CAD is likely to test 98.50. They may not drop USD CAD again, I suppose, and they are expected to gain the levels in the case of USD CAD as well as a contrarian move. So let me come back to that of the PowerPoint presentation. So the initial lows and the highs in the case of euro 1.3262. So it is not far off. 1.3257 is the current level. They can easily go above. And in the case of GBP 5861, and it's also closer to that. So not a very big drop, they had done it. And it is an extended downward move and during the late session. So the late session will be from 5:30 to 7 GMT now. Now on. So 5:30 to 7, 5:30 already is over. So to 7, you just watch. They are making a dip. And around 6 GMT, if they go above and stay there, above that of the initial high, initial low, you can try it. For 30 minutes, you can try to take a buy. As soon as they go there, it doesn't mean that it can stay there. You have to watch physically for 30 minutes from 6 to 6:30 GMT. If they stay above that of the initial low, then you boldly buy, you will be able to see booking profit above that of the initial high. So, euro and GBP still they are below that of the initial low, and in the case of yen, still they are not breached the initial high. Now they are making a small dip before making a rise. These are all buy opportunities in the case of USD yen and USD CHF. They breached the high 90.88 and still staying above there, so they are expected to gain levels first here. In the case of Canadian dollar, 99.66 and 87 they breached, but they just made a breach and come below that of the initial low. So you could come across subdued moves in the case of the commodity pairs. And also in the case of Australian dollar, they made their further dip to 1.0440. High is intact, and they are just around that of 1.0445. A brief downward stop and to come above that, and then subsequently they are expected to slowly gain the level. So when they slowly gain the levels, it is an intentional move. Don't try to do sell and buy. When they quickly gain the levels, understand it is an extended move in order to book profit with regard to the buy position. What they are now doing it holding at a higher level, they book nominally some profit, lighten the positions, then continue to buy at a higher level because they need the margin to take up the market further, because they are the ones to buy at the highest level or at a higher level than that of the market. The players buy at a higher level than that of the market to gain the levels. Then subsequently the short sellers come and buy from them. Then afterwards the technical traders come and buy thinking that it will go up further to heaven straight away. Then they drop. So these are all the three stages by which they try to make the drastic moves in the market on a daily basis. So initial dip and the firming up moves are expected during Japanese session, and a quick rise is expected during that of the European session, and a slide, a profit booking. Then the traders jump and buy at a higher level as a breakout trade. Then swing and quick price moves are expected during the year session. So I take this opportunity to thank FX Trade and also you people who have come here to attend my webinar and try to learn my way of trading system, and you can use it as an additional input in your trading system and try to see that you reduce your market fear. My objective is why I'm disclosing all those controversial things, because I want you to understand that it is a man-made market, so obviously manipulation is a must, so that you'll be able to get rid of the market fear if you understand. If any surprise comes, only then you become stunned. If it is not a surprise, then you don't develop fear. So obviously when you don't develop fear, you use your common sense to take positions and carefully exit out of that. So we'll meet again tomorrow and try to review the market and see how they are taking up the market on a daily basis. So I take this opportunity. Thank you one and all. Thank you.